Hey guys, hope everything's going well. You guys know that drill. Remember to smash that like button, subscribe to my channel here, and also subscribe to my sports card channel, AIH Sports. Now, I don't think this is going to be a long video, but I do want to talk about the stock market has been correcting. It seems that people are getting nervous, and they're getting nervous because the Federal Reserve is going to raise rates. I'm not sure if it's a 50 basis point move or 75 basis point move, but they are going to be raising interest rates. So, looking on that, traders are trying to price that in. And they're getting scared because they think this is a recession coming and they're just trying to protect their ends. But whenever I see fear like this, there could potentially be decent returns out there. And once again, I've stated that I believe there will be decent returns for the next 1 to 2 years whenever we bottom out. Now, some people may say that, hey, we bottomed out in June, S&P close to 3,600. We might have. But like I said again, I'm looking for the Fed to stop raising interest rates. That could be a benefit to the stock market. You could also see the inflation numbers go lower than where they were. So instead of over 8%, maybe inflation year over year goes at 7%, whatever it is. If you see that, people will be like, oh, inflation has peaked. And that may raise consumer confidence, people will spend more, etc. And who knows, the market may be pricing in lower interest rates, which easy money will pump up the market. Now, looking at all of that, I look at fundamentals, right? Now, there are technicians that I do follow. One of them is Zachary Maines. He's over at Elliott Wave Trader. And even though I'm not a technician, I do realize that a lot of people use that. So I do pay attention to people that I normally wouldn't pay attention to. So if you're looking at the RSP, which is the equal weighted S&P 500, his graph shows for the past, I think it's 5-6 months, whatever the time frame is, it's been following a pattern of Elliott Wave, and it's looking at a bottom at, I think, $139. And you have to remember the equal weighted S&P 500 may be a decent metric to look at because each stock in the S&P 500 is weighted the same. And it's not like the normal S&P 500 index where you have high flyer stocks like Apple, which is weighted much more than another stock that isn't a high flyer. So someone may criticize how the S&P is structured, but you could also look at the RSP, and the RSP right now is 141-ish, and Zachary Main's chart says that, hey, the bottom should be around 139 or around there. So if you're looking at just that aspect, that is, and it follows the trend, then we could be seeing a bottom very shortly. And I was buying, put in a buy order for an option trade for Google, and I will be looking at other stocks as well. I will be looking potentially at other tech stocks, for instance. So just from a fundamental perspective, if the 10-year yield goes lower, right? Everyone's saying higher interest rates, but if the trend goes against what everyone's saying, lower interest rates will be a benefit for technology stocks. That's how it was during the pandemic. Lower interest rates pumped up NASDAQ, but then when the 10-year yield and the Fed funds rate was going higher, you saw into the June meltdown, you saw a lot of tech got hammered. Kathy Wood's ARK fund got hammered. But we're probably at a point where, okay, me being the contrarian, those 10-year yields go down and the stock market resumes its uptrend. I wouldn't be surprised if tech has a rebound to the upside. Now, this is not investment advice, by the way. This is just me thinking out loud. So what do you guys think about this? Do you see tech stocks rising? Do you see the market going higher? Let me know. I am quite interested in what you have to say. Anyways, guys, let me know what you think. Smash that like button. Subscribe if you haven't. Comment down below, guys. Thank you. Bye.